The Fed is meeting. In many ways, you think it might not exactly matter to fixed income investors because you think we're in a low rate environment for a while, right?
It certainly appears that way. There are other fundamentals that are overwhelming whatever the Federal Reserve might be doing. Now, they will be ending their purchases, their asset purchase program, we know that. But on the other hand, you have weakness in Europe and volatility around the world, and that increases demand for fixed income securities, particularly for treasuries. So the Fed is always important, but it's not always the most important.
You also see an environment of just low credit growth, too, overall.
There's still not much borrowing going on in the United States. Private sector borrowing is cyclically strengthening some, moderately, but Treasury borrowing is falling off because the deficit is shrinking. And in Europe, there's no credit growth. And in China, they're trying to slow it down. So growth has to be financed with credit, and when you don't have very much credit growth, you don't see runaway economic growth or very strong economic growth. That's the world we're living in still.
And that means, of course, no inflation either.
Very low inflation and commodity prices coming down. Again, that's a reflection of moderate to weak growth around the world. Demand for commodities has weakened.